So how did I actually go about, surviving and making money in the business of trading futures for as many years as I have been doing so? Just simply creating a strategy that works for me each and every day, that allows me to be profitable consistently. All right. That is the key. The number one thing that all traders out there who are interested, trading the NASDAQ futures, the ES futures, gold futures, currency futures, whatever it is that you want to trade, you have to master market structure. Let me say that again. Structure of the market is the most important thing that you are going to have to conquer if you want to become profitable and make money in this business. Now, what does that mean? If you are a first-time viewer, a beginner trader that is kind of educating yourself, what the future market is, and you're scouring the internet, trying to figure out how you can get into starting off, maybe even from a part-time basis, trading the future markets. Structure, all it is when the market is making higher highs and higher lows, or lower lows and lower highs. Now, there is a key ingredient to the full recipe that I love to see, and I continuously want to see if the market is bullish, where it's breaking structure, meaning taking out a previous high and moving to the upside, making it a new high, or breaking structure to the downside and taking out a low. All right. So you have what's called breaker structures, where the market is making and creating structures to the upside or downside. But you also just have what's classified as either just a demand or supply area without a breaker structure. Okay, so there may be areas where the market creates a significant aggressive area of buying or selling, but there may not be a structural break behind it. Okay, but that doesn't mean that you can't still trade that area. But I talk about in tons of videos here on the channel about taking trade setups where you actually have a breaker structure. Now, sometimes you may have, like on the higher base chart, where you have a demand zone and there's not a breaker structure, but you can scale down to like a lower base chart and find a breaker structure on a lower base chart, your entry chart, but on the higher base chart, just have a demand zone. I'm going to kind of show you that today and what I'm talking about. Like, we can take a look for instance, today's during the New York session, the session itself of what took place. Okay, so I'm going to walk you through, just kind of looking at, as the market is making higher highs and higher lows, you should only be looking for opportunities to buy and go long. All right, if the market starts to break structure, and I talk about that infamous pattern where the market makes I'll show you right quick for all those that may be newbies or newcomers to the channel. When the market, let's say, is doing this type of pattern to the upside, where it's making higher highs and higher lows, and then it kind of stops, and then we have a turning point where it makes its first push to the downside, and it pulls back, making a lower high, and then we get a break of structure below. This is the pivotal pattern that you'll see in the market, where it's bullish to the upside and now breaking structure lower, meaning taking out a swing coming lower, making a lower high, and then taking out structure to the left. So that's going to let you know the market is shifting to the downside. For how long, no one knows. But this is that infamous pattern that I've talked about so much here on the channel. Now, what we can see over the last several days, the market has been very bullish, back to the upside here. And looking at the highest base chart, the higher base chart that I actually mark my zones from off the 120 most times. Okay. We don't have, well, we see what the market is taking out highs. We have taken out, pulling back, taking out a new high right here. So this right here to the upside is a breaker structure. Pushed up, made a new high, pulled back, and then broke higher, took out a new high. So we were still making higher highs. Pushed up, came back right here, and now we got another breaker structure back to the upside. Again, above 20,496. That's what we want to see when we have the market being in a very bullish environment, okay? Yes, it's last 2 days. I mean, the market's not really been swinging really quick on the NASDAQ, making quick, swift moves to the upside or downside, whatever the case is, but there's still good setups to take trades from. Now, talking about the strategy that has allowed me to become profitable for 14 years, we're going to go ahead and get into it. And this is how I survived and stayed in the business or game of trading the futures. All right, so let's take a look. We can see the market's making higher highs and higher lows, right? We broke structure above this area, which was right at the close of yesterday. So it made its final attempt and made a high here. Into the Asian and London session, the market pulled back before moving into the pre-market session prior to the New York session opening. This is where it broke and took out this high right here from yesterday at 20,000, say 409 or 410. Okay. Now, right at the open, there was a high probability demand zone. You can see where it's pushing to the upside. Aggressive buying, that's a demand zone. It's also a high probability zone because we have an imbalance or gap resting back at it where the market took our structure above here. Now, this is just an example. I do not trade at the opening or close to the opening or shortly after the opening. Once the market opens at 9:30, Eastern Standard Time, okay, that's 8:30 Central Time. The New York session, I normally wait about 15 and 20 minutes because the volatility is so high. Now, this is just an example to show you of what happens when we have a nice structural break to the upside, and which we need to be looking for a key pullback to a high probability demand zone. I'm going to mark up my first or my highest base chart at the 121st, okay? The yellow box is where I move down to my entry chart, which is on the 24 range. So I couple pretty much a 120 and a 24 range. Sometimes, just recently I've been kind of like looking for, where, say for example, the market doesn't pull back to or we don't have a 120, say, demand zone in this case here because we're pushing to the upside. Could be a supply zone for pushing lower. But I see a nice area where I scale down to maybe a 60 range chart and we have a demand area, and then I move down to my 24 range. Now I'm taking my trades 99% of the time directly off my 24 range because you want to move down to and scale down to a lower base chart, especially if you're trading with a smaller account size. Because look, you don't want to be trading from anything like a higher base chart because you're going to run into issues to where the market may be pulling back and you may get involved in some drawdown. Unless you're trading the micros, and you don't have to worry about that as much because you're not going to be leveraging as much unless you're trading lots of contracts, okay? Because the micros trade at a smaller tick value size than the full-on E-minis. I trade the full-on E-minis, okay? Now, if you're trading, starting off and you're a beginner, I highly recommend trading with the micros to get your feet wet, to build up an account, compound, and, then you can switch up and transition over to the E-minis once you build up, your account size. And I talk about, because people always ask me, what is a certain dollar amount? I mean, watch yesterday's video and some of the other video content that I talk about as far as the capital needed to trade micros, or, when you can switch up and possibly start trading the E-minis. I did a great video on that, covering that yesterday. So watch that video. Now, when the market comes back and taps this high probability demand zone, again, aggressive buying to the upside, I mark off my 120, my first zone here. Then I simply just move down to my 24 range chart. Okay, let's find that zone right quick. Where's it at? 9:30 pretty much Eastern time. Right here. So we've got the break where the market takes out of this high here, creating that demand zone. That's that blue box you see right here. Now, as the markets retrace them back to the zone, I just want to be able to identify a 24 range, a lower base, my entry chart, demand zone resting on the inside of the higher base 120 zone, okay? And people always ask me, well, sometimes, the market may not pull back to a 120 zone. What if it pulls back to maybe like a 60 range zone? Yeah, you can do that. But just keep in mind when you are doing so, when you start scaling down, looking for zones within the zones off of, two small time frame charts or lower base charts, then the scalp could be a little bit shorter. It may not be as great of an impact, meaning you have as much area to trade from. But you can still scalp it, right? Well, now this is a 120 demand zone, and on the inside is a 24 range demand zone. So the market pulls back, you can get into the trade once you have both things have been accomplished. Tap into the 120, comes down, taps into the 24 range demand zone. You take a shot and you go long there, where you can get in aggressive here at 20,391, or wait for the break and close of a candle, maybe the second close of the candle at 394. Either way, you can see the market runs to the upside. This is what I like to classify as the zone within a zone, off of multi-chart confluence setup, okay? Now, I'm going to show you another example just as well. All right, I just found out that I didn't have my camera on, so, all right, forgive me for the first part of the video. But anyways, as you can see, we're back on the 120. You always want to be looking at your higher space chart to get the direction of the market correct. So it does come down, it rejects off of it, and then it comes a little lower. There was opportunity to take a trade right here, to scalp it. and then it comes down a little lower, and then it starts pushing back to the upside, taking out this high right here. Now, there is a beautiful area of demand resting off of the 120 right here. Now, this area right here, as I was saying earlier, you can see where it pushed up and it swiped or broke above this high right here, and then it pulled back and then it broke higher. Now, this is just a demand zone, okay? It didn't break any structure that I know of on this move to the upside, unless it did something to the far to the left-hand side of the chart. But this is just a demand area right here without the market breaking structure off of this swing to the upside. There's no breaking structure right here. It's just a full-on demand area because we have aggressive buying. Is it high probability demand zone? Yes, it is high probability because we have an imbalance or gap resting back at the zone. That's the blue box. I'll go ahead and mark it up. Draw up your higher base 120 demand zone, right? Then we're going to move down to the lower base chart, the entry chart, the 24 range chart. So I get down to my 24. It comes back as it's retracing. You go ahead and start setting up to see if you have a 24 range. We're back on the lower base chart, 24 range chart. I trade range-based charts, guys. I don't trade time-based charts. Please don't even ask me, because the reason why I always say it a million times over is they're just cleaner to the eye to me. I can read price action better than looking at a time-based chart. And I started trading range-based charts after, spending time when I first started looking at various types of chart styles. And to me, I just like the way the range charts move. Okay. But anyways, and there is no comparison. Tell you that now. You can't, people always ask, well, what's a 5-minute chart in comparison to, the range chart or whatever the case is? There is none, because they're both calculated differently. Time-based is exactly what it is. It's calculated based on time, and range charts are primarily calculated based on the amount of volume that comes into the market. Okay. So anyways, this is a breaker structure on the 24 range. So this is the key thing here, where we have a demand zone that's where there's no breaker structure, but we're still following in the direction of the higher base chart here. And it pulls back to a high probability demand zone on the 120. What I want to see, at least on my 24 range, my entry chart, is was there a demand zone just as well with this aggressive buying, but will we had a breaker structure on the lower base chart? Right here we do. Okay, small area, nice swing, pull back, got a low, lower, high, low, coming down, and then it goes back up, forming a bit of structure right here, and then it breaks structure above the high right here at 455. So now we got a 120 demand zone with no breaker structure, but we do have a 24 range demand zone resting right here on the inside of the 120. All right. So when it gets to the area and taps into it, okay, both of them are high probability, take the rejection. All right, get into the trade here at 453, but always be looking at price action to understand where the market can stop at. This is a supply area right here where the market can reject or bounce from. Okay, so I'm gonna get in here aggressive at 453 and take out my trade primarily right here at 458, or back up in here towards the high right here. Okay, you can pick yourself up an easy 10 points off a small scalp like this, and this is the actual trade that I took today, okay? And I posted over in the Discord community. So if you want to join the Discord, let me go ahead and say that as well. The link to it is down in the description portion of the video. It's free to join. Also, if you want to become a elite channel supporter, many of you may be asking what that is. What that is a private community for individuals that want the trade breakdowns, to where I'm going through in depth, as if you're sitting right next to me, trade setup after setup after setup. There are tons of those videos, trade breakdown videos that I've done for the elite channel supporters. You also get the video playlist and a great video that I covered on market structure for anyone struggling with that concept. All that for only $6.99. I am constantly making new trade breakdown videos almost, a few times a week. And trust me, there's tons of those videos already posted where you can watch. That's going to help you understand these type of setups to look for when you're actually back testing and forward testing, as you're gearing up and educating yourself to want to trade. All for $6.99. You get all that. When you click on that elite channel supporter link, make sure to choose the second tier for $6.99 to get direct access to it. Think about that. That's like 25 cents on the day. That's all it is. So pennies on the dollar, okay? Or if you want to say, well, that's basically a price of a cup of coffee that you pay for almost on a daily basis, right? That adds up to probably be $50, $60 a week. Here's something that could change the way that you actually look at trading for only $6.99 a month, okay? I can't guarantee anything because the way you may be able to view the markets may be different than how I view the charts. But the reason why I created all this content is because I want to be able to curb people's edge, in a sense, to where you don't have to spend as much time trying to figure things out like I did from the beginning. Okay. This is pre, micros, where there was no opportunity to trade in micros. I wish there was when I started off. Okay. But there wasn't. All right. So this just goes to show you how long I've been doing this. All right. But this is another beautiful setup for 10-point scalp right there. And I'm just showing you that when you look for moves like this, where the market is making or breaking structure to the upside or creating nice areas of demand on the higher base chart, like right here, we came down, low, lower, high, broke slightly below here, a new low right here, came back up, broke structure above here. So now we got a break of structure to the upside right here. Here is a beautiful area of demand on the 120 chart now. Okay, so what I would do is look for a pullback. Once it taps the 120 demand zone, I'm going to be looking to see is a 24 range demand zone resting on the inside to take a trade going back long. Simple as that. Okay. But that's all I have for you guys today. I appreciate everyone that follows the video content. If you're a beginner trader, someone that's new for the first time, make sure to subscribe. Go ahead, click on the sub button right now. Make sure to turn your post notifications on so you do not miss any of the uploaded content that I post almost on a daily basis. Again, subscribe. Also, if you want to join the Discord, the link is down below in the description portion of the video, as well as the link to become an elite channel supporter. Okay, they're right on top of each other, pretty much. Outside of that, if you found value in today's video content, guys, please do me the biggest favor: click that like button, that thumbs up button, to show me how much that you value the content in which I'm making on a daily basis. If you're a first-time viewer, again, if you found value in today's video just as well, please go ahead and click that like button as well. Okay, I appreciate it. Take care. I'll see everyone in the next video.